Obviously, it's always really unfortunate when a couple separates or divorces, but it can be sometimes more difficult to get out of a mortgage than a marriage, honestly. What you got to understand from the lender's point of view is that when they've granted this mortgage in the first place, they're taking into account often two incomes, both parties are working. So when the affordability is assessed, it's on that basis at the point of the application. So when a couple separates and one of them applies to perhaps put the mortgage into their own name or have their ex taken off the mortgage, the lender is duty bound to reassess the affordability situation to ensure that the affordability is still there. Now, that means an assessment of your incomings and outgoings. It's not enough that you've been paying that mortgage from your own income for a certain length of time, even if you can evidence that. The lenders have to go through a new affordability assessment, and that's what they'll do. So the situation often occurs here is that by taking one partner's income away from the equation, then unfortunately it doesn't fit the lender's assessment. So you end up being in those positions tied almost to this ex-partner for a length of time, because often if there's children involved, no one's keen for the property to be sold. So it could be that you separated some years ago, but you're still connected to this mortgage with your ex-partner. However, different lenders have different affordability assessments. So some lenders are better with things like tax credits and child benefit and maintenance income than others. Not all lenders take that into account. So it's worth talking to a mortgage broker at this point in time. If this happens where your lender declines your application to have your ex removed, or it's affecting your ability to get a new mortgage, it's worth having a look at other lenders, because each lender has their own individual way of assessing your affordability, and we get big disparities lender to lender in terms of how much they will lend you. So it's always worthwhile having a look at all of your options, because clearly people want to move on with their lives, and it might be that the ex also wants to take out a mortgage of their own. When that happens, if you're not able to remove yourself from your old mortgage, then the monthly payment on your old mortgage will be assessed in terms of the affordability assessment on the new property that you want to buy. So in other words, if that partner moving on wants to take out a mortgage of their own, they'll be able to borrow less money if they're still connected to the original mortgage. So again, it's really unfortunate when this happens, but just because your original lender has said no to your application, it's not necessarily the end of the road. Thanks for watching the video. We do rely on user-generated content, so please subscribe if you found the information useful, and send me a question in the comments below, or drop me an email and I'll do my best to answer it.